Here are the pro tips you are looking for. Tip number 1, you want to pay yourself less. This might sound counterintuitive, but this is really important. If you own your S corporation and are paying yourself too high of a salary, you could be overpaying in thousands of dollars on your S corporation's payroll taxes. Of course, you still need to pay yourself a reasonable compensation for the job you are performing for the company, but you want to make sure that you are not overpaying yourself. And your business will report your well thought out salary amount on Form 1125E and carry the total form from that form over to the compensation of officers on line 7 of your Form 1120S. So tip number 1, pay yourself less. Save money in terms of payroll taxes. Tip number 2, deduct your health insurance premiums on your Form 1040. And the thing is, unfortunately, if you own an S corporation, you cannot receive tax-free health insurance. However, if your S corporation establishes the health insurance plan for you, then the premium can be actually included on your W-2 taxable wages. Okay, and you'll be able to claim the deduction on your Form 1040 if you meet 3 important criteria. The S corporation must pay your premiums. You must correctly report the premiums on both your business and personal tax returns. You, the S corporation owner, are not able to receive health insurance through another employer or your spouse's employer. So in other words, this has to be the only way for you to get health insurance. Additionally, you can deduct any premiums your S corporation paid for your accident insurance, dental insurance, and or long-term care insurance. You also don't have to pay Medicare, unemployment, or Social Security taxes on the money your business pays for your health insurance. And finally, you don't have to pay taxes on any health insurance premiums your business pays from any non-owner and non-family employees through a group health insurance policy. So this is really important to have that. So tip number 1, pay yourself less. Tip number 2, you want to deduct your health insurance premiums on your Form 1040. Tip number 3, you want to hire your kid. By the way, welcome back to the channel. It's really a pleasure to have you here. Into this conversation, we're talking about 10 tax saving strategies for S corporation. Hire your kid. Now, it's very important to understand when you hire a family member, you are really actually you can enjoy some tax benefits. Okay, and the thing is that let's say if you hired your child in the family S corporation, you can actually each child can earn up to nearly $13,000 without paying any personal federal income taxes on that money. So this basically decreases the income taxes for the family. So even though your S corporation will have to fork over payroll taxes on those wages, you will still come out ahead overall. So to use this tip, your child will need to be at least 7 years of age and must be completing an actual job for the business. Otherwise, the IRS will think you're actually gifting, you're actually donating cash. Okay, you're making gifts to your child, monetary gifts. So it's also important that you pay your child the same amount you would pay anyone else to complete the job you have hired your child to perform. You should also follow all other procedures that you would complete with a non-child employee, such as onboarding, W-2s, and timesheets. The IRS just wants to make sure that everything is made within the procedures. Very important. So tip number 3, hire your kid. Tip number 4, you want to deduct your home office expenses. And this is really important to understand that a lot of our clients, a lot of our business clients, they run their S corporations out of their home offices. If that's you too, then your business should be reimbursing you for any expenses accrued in your home. So this will give you, the homeowner, tax-free income and will allow you to actually have a deduction for your S corporation. So you will need to create an accountable plan and follow proper record-keeping procedures for expense reports and reimbursements. But those steps are definitely worth the money you will get back. And your business will report your home office expenses with other deduction on line 19 of your Form 1120S. Now, don't forget to attach the statement so that the IRS can properly account for those expenses when looking at your tax return. Tip number 5, you want to deduct your cell phone expenses. By the way, I want to quickly remind everybody of today's topic. We are having a conversation about the top 10 tax saving strategies for S corporations. So what about your cell phone expenses? When your S corporation provides your cell phone, let's say you're using a company phone, okay? What will happen here is that this is a fringe benefit that becomes tax-free income. If you also use that same cell phone for personal use, that's fine too. Now, your S corporation can reimburse you for the business portion of the cost of the phone and can then deduct that amount on the corporate tax return. Your business, what will happen here is that your business will report your cell phone expenses with employee benefit programs on line 18 of your Form 1120-S. One thing I want to say here is that when we talk about record keeping, please make sure that you take this very seriously, because the IRS is going to check this. And so it's all about, you can deduct whatever you want to deduct, but make sure that you have proof and you have the receipts for that. For example, if we were speaking about cell phone expenses, please keep your bills, right? Nowadays, everybody has their phone bills online, so it's saved on the cloud. So when come tax time, make sure that you download all those bills for the last 12 months and you actually attach them. Actually, you can have them saved somewhere. So if the IRS wants to really dig a little deeper, you can just send them those forms, those bills. Tip number 6, you want to reimburse your travel expenses. If you are traveling for business, you definitely don't want to forget to reimburse yourself for those expenses you may have paid out of pocket. You just need to make sure you do it the right way by submitting an expense report and reimbursing yourself through the business account to create a deduction for your S corporation. Make sure you look over all the procedures you need to follow when actually deducting travel expenses so you don't forget anything. And your business will reimburse travel expenses with other deductions on line 19 of your Form 1120-S. So, tip number 5, deduct your cell phone expenses. Tip number 6, reimburse your travel expenses. Tip number 7, you want to rent your home to your business. Now, hear me out. If you plan to hold meetings in your home or use your home for any other business-related gatherings throughout the year, you can actually charge your business rent for that use. Okay, this might sound counterintuitive for you, but yes, you can actually charge your business rent for that use. The thing is, your business is a separate entity from your from yourself, right? So paying yourself rent could result in a big tax savings because your S corporation can deduct the amount of the rent and you'll have more personal income that will be free from income tax. The only caveats here are your rent can only be for 14 days or less of use during the course of the year, and you should keep a record of the purpose of your rental. And the rent should be in line with what similar spaces in the area would charge for the same amount of time and use. In other words, the IRS just wants to make sure the transaction was at arm's length. It's like it hasn't been any sort of preferences, any sort of preferential treatment throughout the transaction. Your business will report the rental expenses as rent on line 11 of your Form 1120-S. So big decision time here. Let me ask you a question. Are you currently working from home? Or if not, are you sometimes conducting businesses out of your house? And would you do this for at least 14 days for the last 12 months? If this is the case, you really want to think about that. Now, the only thing is, please make sure that you are not charging anything exorbitant. The amount you're charging should be really, really reasonable. And as I said before, it should be in line with what the other I think business office space or business office properties are charging in the area. In other words, for example, if you're in New York and don't charge $5,000 for 2 weeks, if any other building or any other similar office space in the area, if they're charging $2,000 for 14 days, so your rent should be in line with what people are charging in the area. Tip number 8, you want to reimburse your vehicle expenses. By the way, I want to quickly remind everybody of today's topic. We're having a conversation about tax saving strategies for S corporations. And so you can rack up major tax savings with a vehicle deduction, also known as Section 179 deduction, especially if you have a home office. To qualify for this deduction, there are several requirements. The three main ones are: the vehicle can be new or used, but the vehicle must be new to you. The vehicle must be titled in the company's name and not your name. And the vehicle must be used at least 50% of the time for a business. Okay, so first let's talk about what a heavy vehicle is. Don't worry, you're not going to need to go out and buy a big rig to satisfy these requirements. In the eyes of the IRS, a heavy vehicle is any vehicle with a gross vehicle weight rating, a GVWR, of more than 6,000 pounds. This includes many SUVs, crossovers, and full-size pickup trucks. If the vehicle you choose is an SUV, your deduction will be limited to $25,000, but others are only limited to $1,080,000. Now let's talk about how having a home office actually helps you reach that 50% of use towards business miles. Anytime you leave your home to complete tasks for the business, those miles count towards your business miles and can really start to rack up. Make sure you are keeping track of your business miles so you can show you have met the 50% requirements. Finally, in addition to the initial Section 179 deduction, you can also qualify for a 50% depreciation bonus when you buy a new or not used vehicle. And no matter the age of the vehicle, you will also qualify for a modified accelerated cost recovery system, a maker's depreciation bonus over 5 years. So that's a lot of numbers and percentages. So let's look at a real life example. So let's say your S corporation buys a new 50,000 SUV that weighs over 6,000 pounds and will be used 100% of the time for business purposes. So here is what will happen like in reality. So you get a 25,000 Section 179 deduction. You will also get a 50% bonus depreciation deduction of $12,500. So to get these numbers, take the purchase price, subtract the Section 179 deduction amount, and then divide by 2. You also get a maker's bonus depreciation deduction of $2,500. To get this number, take the purchase price, subtract your Section 179 deduction, subtract your 50% bonus depreciation deduction, and then multiply by 0.2. And for this example, your total business deduction will be $40,000. Tip number 9, you want to reimburse your depreciation expenses. The thing is that if your S corporation is using your vehicle or home for the business can reimburse you for the depreciation expenses associated with using those items for your business. The thing I want to say here is that please always keep in mind that your S corporation is a separate entity, is physically and legally segregated from your personal affairs. Okay, so when we talk about renting the business, renting an office space from your house, or all those things, those are real life examples. Okay, so when we talk about actually reimbursing your depreciation expenses, this includes any Section 179 expenses, such as the heavy vehicle discussed earlier. So this depreciation expense reimbursements become a deduction for your S corporation and tax-free income for you. Just make sure again that you have an accountable plan and that you report the expenses and request reimbursement appropriately. It must be done procedurally. There must be some procedure in place whereby you actually request those reimbursement. And what will happen here is that your business will deduct this depreciation expenses as part of reimbursement for employee business expenses and report that specific amount with other deductions on line 19 of your Form 1120S. Here is the approach you need to follow. One thing, you want to please beef up your record keeping. You want to make sure you have the appropriate amount. And when I talk about beefing up your record keeping, I mean, you need to have a space, a procedure in place where you can file paperwork either electronically on the cloud, for example, or on a USB drive, or physically where you have a closet, where you have a closet, I mean, not closet, you have some kind of cabin where you actually file all this paperwork, okay? And then you have to make sure the numbers that are shown on the actual bills and actual receipt that you have, those numbers match numbers that are shown on your accounting reports. So for instance, if you're using QuickBooks for your accounting, for your business accounting, make sure the numbers that are shown in the income statement match exactly what's shown on the receipt. There must be reconciliation. You got to reconcile those numbers. Very quintessential. Tip number 10. You want to sell your home to your S corporation. The thing is that this might sound a little bizarre to you, but this is hear me out. This is really this works fantastically. If you're still going to live there, you don't want to do it. But if you don't want to live there, why not? If you plan to convert your home to a rental property, you can save big bucks by selling it to your S corporation first. By doing this, you can avoid paying taxes on up to $250,000 of the profits from the sale, or up to $500,000 if married and filing jointly. In turn, this sale also increases your S corporation's deduction. Okay. Now the thing is, I ask you to please talk to your CPA, your EA, or your tax attorney if you want to dig deeper with this strategy. Okay. Your CPA, for example, can help you report the transaction correctly on your Form 1040, so that you opt out of the installment sales method and report the gain on Form 8949 with your Form 1040. And the thing here is that you have to understand there are benefits on both sides. So you have benefits on your personal side on your Form 1040, but also benefits on your S corporation side on Form 1120S. Okay. For example, your S corporation will actually report this purchase under depreciation not claimed on Form 1120A or elsewhere on return. So you have to attach Form 4562. We have actually covered Form 4562 elsewhere. And so you have to put this on line 14 of your Form 1120S. Okay, so this is really important. And the thing is that, please, again, talk to a CPA, an EA, an enrolled agent, or a tax attorney if you want to dig a little deeper, or you can ask us questions. Please put your question in the comment section below and we'll certainly get back to you. Not a problem. Big decision time. Big decision time. Are you currently planning on selling, and let's say selling your house to, let's say, a third party, basically moving out of your house or converting your home to a rental property? If that's the case, please study the hack that I just gave you, whereby you actually selling your home to your S corporation first. There are a lot of fiscal advantages with that. If you have made it so far in the video, I want to give you a bonus. And basically, let's talk about S corporation federal tax filing dates, so you have a clear idea what you really need to do. Now, an S corporation really is a pass-through entity, meaning the profits and losses from the corporation are reported on the tax returns of individual shareholders who are also responsible for paying the tax on it, right? So that the S corporation still has a responsibility to file an informational return, so an informational income tax return each year, as well as a range of other IRS forms that relate to various other taxes it withholds from the wages it pays to employees. So simply because the corporation, the S corporation, is not paying taxes, does not absolve it of the tax filing and tax preparation responsibilities. So what about the S corporation income tax return deadline? Well, an S corporation is required to file its annual tax return by the 15th date, the day of the third month following the end of the tax year, generally March 15th, unless this date falls on a weekend or holiday. The business is responsible for reporting all financial activity on Form 1120S and attaching a Schedule K1 for each shareholder. This Schedule K1s report each shareholder's share of the business taxable income, so they can report it on their personal return. Okay, and if the S corporation is unable to file by the deadline, it can obtain an extension of time to file by filing IRS Form 7004. The shareholders who pay tax on the S-corporation income are generally subject to the same deadlines the IRS imposes on individual taxpayers, which in most cases is April 15th every single year. And what about quarterly income tax return deadlines? Well, if the S-corporation pays wages to employees, then the company is responsible for withholding federal income tax as well as Social Security and Medicare taxes from their paychecks. So this requires the S-corporation to file an IRS Form 941 each quarter to report the aggregate amount it withholds and needs to send to the IRS. And so this form is basically due 4 times a year, typically on January 31st, April 30th, July 31st, and October 31st. And what about unemployment tax filing date? Well, having employees may also require the S-corporation to file an annual federal unemployment tax return each year on Form 1040. If the corporation pays wages of $1,500 or more in any calendar quarter, or has at least one employee working at least part of a day in 20 or more separate paychecks, it typically needs to file Form 940. And the purpose of the form is to report the amount of wages the S-corporation owes unemployment taxes for, which the corporation is responsible for sending to the IRS. Okay, so this is the due date for filing Form 940 is January 31st for each year. So, however, if the corporation pays the entire tax on time, the IRS will basically allow it to file as late as February 10th. So there are penalties if there are penalties for filing late. So please do not be late. Thank you so much for your attention. I really appreciate it. In today's conversation, I was just talking to you about 10 tax saving strategies for S corporations. Pay yourself less, deduct your health insurance premiums, hire your kid, deduct your home office expenses, actually deduct your cell phone expenses, reimburse your travel expenses, rent your home to your business, reimburse your vehicle expenses, reimburse your depreciation expenses, and sell your home to your S corporations. Thank you so much. God bless you. I'll see you next time.